Do you pay taxes when you inherit a house? That's a great question. So hey guys, this is Brad with GeorgiaProbateResource.com and ArborViewHomeBuyers.com. Thanks for checking out this video. We're a real estate solutions company. We buy houses for cash, and we can also help you list the house as well. So this is a question that comes up a lot. We see this searched on Google a lot. We see a lot of traffic on articles around this. And it's a great question. First of all, I want to preface this conversation with I am not a CPA. I'm not an accountant. We highly suggest that you consult a CPA about this for tax questions. But you know, we've been doing this long enough that we generally know the question. But again, this is not applicable to everyone's situation. So I'm going to give you some examples of sort of broad situations, and then you can consult your CPA about that from there. So do you pay taxes when you inherit a house? The number one thing that most people need to pay attention to was this property a investment property, or was this property a personal residence? Typically, if the property is a personal residence, there is an item in the tax code called a step up in basis. There's been some talks about it over the years, people trying to eliminate the step up in basis. And let me explain how the step up in basis basically works. Is that, let's say mom and dad owned a house, and you've inherited this house from mom and dad. Mom and dad bought the house 40 years ago and paid $100,000 for this house 40 years ago, let's say. Let's say today the house is worth, I don't know, $500,000, okay? Probably $500,000, let's just use that number, okay? So now all of a sudden the difference between what mom and dad bought it for and what it's worth today is pretty significant. It's $400,000, okay? So if mom and dad paid $100,000 for that house 40 years ago, that is their basis, plus any improvements they might have made to the house over the years. So if they did a $100,000 remodel, you know, 10 years ago, right, their basis is now like $200,000 instead of $100,000. So your basis is basically what you have in it, is the best way to describe it, right? And you'll handle that with your accountant. So your basis is here, $200,000, and now the property's worth $500,000. Well, now we've got a $300,000 gap there. So what happens is you have a capital gain of $300,000. Now, if this was mom and dad's primary residence, typically when you inherit the house, you're going to get a step up in basis. And what that means is that the IRS is going to allow you to step up the basis of the house to whatever the value is today. So now if the value of the house today is $500,000, when you inherit the house, your new basis is $500,000. So if you go to sell that house today for $500,000, you didn't really have a capital gain because you just stepped up the basis to 500 grand and you sold it for 500 grand. So you didn't really make any money. So you're not going to have capital gains on that. But if you stepped up the basis when you inherited the house and then you sold the house 3 years later for $600,000, well, now you have a $100,000 gain and you might have capital gains taxes on that $100,000 gain. So you need to pay attention to read up on step up on basis, and again, consult your CPA about this. Don't just read on the internet. Don't take my word for it. But step up on basis is a huge thing, and it benefits a lot of families. Now, there is a sort of a cap on that step up on basis, and those rules have changed over the years. The best thing to do is go look online. You're typically exempt. Most estate taxes are exempt up to a few $1,000,000. So you want to check the exemption amount, and basically, typically, you're exempt from capital gains taxes up to a certain amount. Now, there's been a lot of uproar in Congress about reducing that amount, the exemption amount, and eliminating the step-up basis. But the reality is you know, that's a huge benefit to a lot of Americans. So I highly doubt that they're going to adjust that. So check that out. Check out the exemption amounts and the step-up in basis, and that'll tell you how much you actually owe in taxes. Now, there's a whole different situation here which involves investment properties, and that can get very complicated, and you should consult a CPA about that because you have depreciation recapture. Whether you were claiming depreciation at all, you need to look into those things. You have long-term capital gains, and then you've got just other issues with the tenants and so forth. So make sure you're paying attention to the assets that the estate owns, and you're you're looking at talking about your basis and figuring out what your basis is, and you can talk to a CPA about that. So I hope that helps. Thanks again, guys. Again, Brad with ArborViewHomebuyers.com and GeorgiaProbateResource.com. We're a real estate solutions company. We're here to help. We specialize in probate and inheritance, and we're here to help you with your property, whether you want to sell it quick for cash to us or you would list it out on the market. I'm a licensed real estate agent with One Source Realty in Georgia, and if you want to go that route, we'd be more than happy to help you with that as well. So thanks again, guys. We appreciate it. Have a nice day.